Hello, my name is Nick Quinn.
Hi, I'm Connor Woods.
Hello, I'm Shane Vernier, and we're the market analyst team at howtotrade.com. Together, we'll explain everything you need to know about trading the falling wedge pattern. All right, let's get started.
A falling wedge pattern is a bullish trend reversal chart pattern and can be seen as either a trend reversal or a continuation pattern, but usually signals a potential buying opportunity. It's showing us that the previous downtrend is starting to end and the market is about to then move higher. Sometimes it can be found within an existing uptrend, and that's when it's seen as a continuation pattern. They frequently occur in all markets, and Forex traders can then sometimes use that pattern as a sign that momentum is slowing and the market is going to move into a period of consolidation, which would then precede the next move in the uptrend. So let's have a quick look at exactly how we'd go about identifying it. So to properly identify a falling wedge pattern, what we're looking for is it tends to occur within a bigger picture bullish move. Price starts to counter trend trade against that move, and that's what we're looking for. You want to then draw two trend lines in across the price action as it starts to trade back into the range. And what we're looking for is to draw the bottom one, the support point down, connecting the lower lows, and then the upper resistance line connecting the lower highs. Now, it's very, very important that we have at least two lower lows and at least two lower highs to validate the setup as a whole. And then what we'd be looking then, as price then starts to contract, we'd be looking for the market to break out to the upside, and that would be our cue to get long this market, as you'd be looking for continuation in the up move. You could potentially maybe buy the close of the breakout candle. That would be one way of doing it, but I would be very, very keen to set a conservative stop on something like this. I would certainly want to have a stop loss on the opposite side of the support trend line structure, just to give yourself a reasonable amount of room, just in case we get some kind of a push back down into the structure before it then retests and then goes and then starts trending higher. But that is the way that we would go about identifying a falling wedge.
So let's have a look at some examples now. Now, typically the falling wedge pattern comes at the end of a downtrend where the previous trend makes its final move. So in this example, we're going to look at the reversal trend and how we can catch that move to the upside. So here you can see a market which is typically trading to the downside with a series of lower lows and lower highs. Now, when we get these drawings on, we can see at the end of this downtrend, we have these converging lines, and that's where our wedge forms. Now, we want to wait for this breakout candle. When we get that breakout candle above our trend line, you can see that the momentum has completely shifted in the market, and now we're trading bullish and to the upside. So the second way we can trade the falling wedge pattern is to find a long-term bullish trend and buy the asset when the market contracts throughout that trend. So the underlying trend will still be bullish, but we'll have multiple falling wedges there. And each time that falling wedge occurs, that presents a buying opportunity. Now, when we look at the chart now, we can clearly see this particular market in an uptrend. Now, when we get the drawings on there, this is the underlying bullish trend that we have, but within that bullish trend, we have 1, 2, 3 falling wedges, and each time that falling wedge occurred, we got that breakout candle to the upside, and we had that continuation in the trend.
Okay, let's look at the pros and cons for the falling wedge pattern. Number one, the falling wedge is simple to identify. Also, it's a frequently occurring reversal pattern across the financial markets. It's one of the most accurate and reliable chart patterns in all of technical analysis. Also, the falling wedge works well with other technical indicators such as Fibonacci ratios, moving averages, MACD, and RSI. Now, on the con side of the ledger, there's a confusion about the type and implication of the falling wedge pattern. Is it a reversal or continuation pattern? In this area, there is a bit of discretion involved if you're using the falling wedge to trade reversals and/or trend continuation. Also, it requires the knowledge of other technical indicators. The falling wedge works best when combined with other technical analysis tools, so you're going to need to have a base knowledge of at least one or two other indicators. Now, let's review some of the key takeaways from the falling wedge pattern. Number one, the falling wedge pattern is a frequently occurring chart pattern in Forex trading that appears at the end of a bullish trend or during a pullback in a bullish trend. The pattern can signal a trend reversal or continuation, depending on the condition of the market itself. Now, it's best to combine the falling wedge pattern with other technical indicators, including moving averages, RSI, MACD, and Fibonacci retracement levels. When using the falling wedge pattern, a trader will be looking for a breakout of the upper trend line as a signal to buy the currency pair. Now, if you want to learn more about the falling wedge pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to fit the falling wedge into your own trading methodology. Then we'll demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain experience. And once you're ready, feel free to join our How to Trade Funded Trader program.